The Bitcoin price continues to grind upwards right now, still above $90,000 per coin, and during these uncertain times, who's actually buying, who is pushing price up? Well, first piece of news out of 3 today, Justin Jack Mers launches a new company called 21A, new publicly traded company whose sole purpose is to accumulate as much Bitcoin as possible. They are pitching themselves as the next MicroStrategy, actually better than MicroStrategy, meaning watch today's whole video, because understanding this information today is like finding MicroStrategy. Michael Saylor's company, which exploded in stock price in the last 4 years along with Bitcoin's rally, is like finding it back when it was just a few dollars, because this new company is backed by Tether, backed by SoftBank, and backed by Cantor Fitzgerald. And you remember Howard Lutnick was the CEO and chairman of Cantor Fitzgerald before joining the Trump administration as Commerce Secretary, so they do have the United States government connection. And this launches now with over 42,000 Bitcoin, around $4 billion already on its balance sheet.
Jack, when did this idea come to be?
The founding story. So I co-founded the business with Tether. I would say I've known the Tether group for over a decade. There just weren't that many Bitcoiners around over 10 years ago. So we've done a lot of work together in El Salvador, et cetera. We've been so inspired by Michael Saylor and all of the public companies acquiring Bitcoin. But I would say over the last few years, that inspiration turned into what we thought was an opportunity and a hole in the market that we could deliver on, which is bringing blue chip credibility and startup upside. We feel like we can bring enough capital and be big enough to win. We're small enough to grow, and most importantly, a pure Bitcoin business. A lot of these companies, they're pivoting from a past operating business. They're rebranding, changing their name. They're maybe selling video games to buy Bitcoin or selling medical equipment to buy Bitcoin. Right. And we're a purpose-built Bitcoin company. We're going to build Bitcoin products, Bitcoin cash flow, and we're going to give Bitcoin per share growth to shareholders and be hopefully the best way for investors to get Bitcoin exposure.
So the reason MicroStrategy absolutely exploded in these last 4 or 5 years is because they used a very specific Bitcoin strategy. The MicroStrategy playbook was this: they'd borrow cheap money with convertible notes. They'd borrow this money at a very low to near zero interest rate, so it was very cheap. They'd use it to buy a lot of Bitcoin. Bitcoin's price would rise, and Bitcoin's price was rising well before MicroStrategy, but due to its finite supply, Bitcoin's price would rise. They owned a lot of Bitcoin, and then their stock price would rise, and they'd use that new value to then repeat the process all over again, borrow more cheap money, buy more Bitcoin, etc., etc. And of course, MicroStrategy didn't start out as a pure Bitcoin play company, but they turn into that. Well, 21 is aiming to be the pure Bitcoin play, better than MicroStrategy and also better than BlackRock.
An ETF is not an operating company. Bybit isn't outgrowing your exposure to Bitcoin. It's a static exposure through their security instrument. Whereas for us, we're a business. I'm a CEO. Right. I get up, I work every day to grow how much Bitcoin your share represents on our balance sheet.
So the thought process is, yes, you could just buy Bitcoin through an ETF, and if you buy $100 worth of Bitcoin through the ETF, you'll have $100. But if you buy their stock, they will work to make sure your Bitcoin per share keeps increasing.
We encourage you to check out our filing. We've introduced 2 new metrics to the public markets. One is BPS, stands for Bitcoin per share, as opposed to earnings per share. And the other is BRR, which stands for Bitcoin return rate. And my job and what I'm dedicated to do for our shareholders, in which we view similar to our customers, is grow our Bitcoin per share. So we're an operating company. And when you buy a share of 21, in a hypothetical sense, what we intend to do is, let's say our Bitcoin per share is 0.05. Our intent is to be able to grow that to 0.06 Bitcoin per share, 0.07 Bitcoin per share. Where a vehicle like an ETF, your exposure is static. So 21's an operating business, and we will be building Bitcoin products, Bitcoin operative cash flow, and then using the capital markets to accretively grow the Bitcoin on our balance sheet. So we want our shareholders to get wealthier, get richer in Bitcoin terms, and our metrics encourage the market to view us not in fiat terms, in Bitcoin terms, because we're not here to necessarily beat the market. We're here to build a new one and encourage the world to adopt Bitcoin in a sense that we believe it hasn't yet.
But Jack, you already have a Bitcoin product, and it's Strike.
Yes.
And it's where people can buy, sell, store their crypto. What happens to that? Are you still going to be leading that business?
Yeah, I'm the CEO of both companies. We're actually disclosing today at Strike some of our financials. So Strike, immensely profitable. We have over 20% EBITDA margin, 85% gross profit margin. We have only 75 employees.
Now, obviously, whether it's this company or Michael, Saylor's company or the Bitcoin ETFs, this is just good for Bitcoiners all. These entities will be through there, buying, pushing the price of the underlying asset up. Also, Jack Mers is one of the speakers at this year's. At the last few days of the Bitcoin ETFs, we do see the United States Bitcoin ETFs have been buying. There's over $2.20 billion of inflows in just the first 3 weeks, 3 days of this week, and this is significant to me is because this represents the biggest inflows into the ETFs since January, meaning, obviously, people were excited it was a local top to invest in Bitcoin in January. Then we had a couple months of LOL. Now it seems the institutional buyers are back and looking at altcoin news because the information Cardano founder says Ethereum won't survive the next 10 to 15 years. Now, obviously, Charles is a little biased because he has a competing protocol. He founded a competing protocol. But also, this is interesting is because Charles Hoskinson was one of the original co-founders of Ethereum, and now he's saying it won't survive. Let's listen to this clip, then I'll react.
So I don't think Ethereum will survive, more than 10 years to 15 years. The layer 2s will continue to suckle out all of the alpha. And people will start fighting, and it'll get harder and harder for Vitalik to be able to hold it together through sheer force of will. And users will gradually migrate to other places, and then they're going to get eclipsed by Bitcoin DeFi, because once that turns on, the TVL will be larger than Ethereum. And a lot of people will start migrating in that particular direction. And that paradigm's in UTXO, so very naturally starts moving people in that direction. And the other thing is they're being eaten alive by Solana and Sui and these other things. So brilliant project. It's just victim of its own success, like MySpace or any of these other things that have a lot of network effect and momentum. BlackBerry is another example. But people have fundamentally different paradigms that over the long term are intrinsically superior.
So here's my take, and feel free to share your take down below. Let's all check the comments section together. But my take is this right now: the biggest things the Ethereum protocol has going for it is security, meaning it's very trusted, also decentralized. It's more decentralized than a Solana or even a Sui, just because those protocols are so much newer, but also network effect, just like MySpace, or that's the negative take, or just like the iPhone, huge network effect. Now the question is, can it maintain its network effect unlike MySpace but more like the iPhone or Facebook? I hold a lot of Ethereum, meaning I'm not selling meaning in that sense. I do believe it can. My biggest hesitation on Ethereum though, and this is something I've been thinking about more and more, is the layer 2s like Cody, which is the privacy-centric layer 2, or Muse, one of the blue chip layer 2 that's backed by Vitalixman. When a layer 2 gets so popular and all those transactions eventually settle on the base chain Ethereum, the layer 1, if those L2s get so popular, then what's to stop them from just breaking off, saying, hey, we got so popular, we have such network security and reliability, now we're just going to have our own chain. The layer 2 can become the layer 1 through an upgrade if they choose so. That's something to think about long term. Of course, on the bright side, when that happens, that means that Ethereum and that network of the layer 2s, the whole network of Ethereum, if that happens when it became so popular, things like that are happening. And also, for maybe everyone L2 that really gets successful and breaks off, maybe there'll be 900 others that are comfortable staying on the Ethereum chain. So really, we won't know if this comes true for another 10 to 15 years, but I will keep tabs on this. I will keep you updated. So if you have a friend, or if you have not subscribed yet, it's completely free. Give it a shot. Free information to stay updated on crypto.